Colin, let me get your take over the share price in the last few days at 404 a share. What's the fair value of this company?
Well, I think we have to talk about first what's going on a fundamental basis with the company. And, not only did we get some, rumors around potential price cuts in China, but we're seeing cars get pictured in the lots outside the China facility. And what the company's promised is a significant cost reduction out of that facility. And so that facility is ramping on schedule or even a little bit ahead of schedule. And they do get the synergies and the efficiency that they've been expecting. There's potential for, a material improvement in terms of their cost structure and their gross margins, which would drive the stock meaningfully higher. So as we think about that price cut, that may be indicative of where their cost structure is going to shake out and passing those savings on to consumers.
So do you look now at a $385 price target when shares are at a 404 and the news on China and potentially raise the price target into 2020?
So obviously we can't anticipate any price target changes, before we do them. But what I will say is that we're looking for more data, and this has been an extremely volatile stock, and so momentum does move in both directions. We saw the stock get oversold, earlier this year and rally, and we certainly have seen big moves both up and down. But what I will say is as we get more information about volumes, and there's a big push to finish off the quarter with strong volumes and more information about gross margins and what the potential earnings power is as they hit these higher levels of production, we will certainly reevaluate our price target and where we think the company can go. One thing I'll note that, since we published that price target and put it into place, Daimler announced that they're going to be laying off 10% of their management. They're going to miss the EU emissions targets, even after buying credits from other companies for zero-emission vehicles. And so we continue to see Tesla having a 2 to 3 year lead from a technology perspective on electric drivetrains and powertrains, and we think they're leveraging that into market share, and will be able to continue to do so for the next 2 to 3 years.
Colin, you talk about market share, and I'm showing a chart to our audience right now, which is described to you over the phone, basically showing the car market over in China. Car sales have been falling pretty much for a straight year over in China. As you take a look at Tesla defending their market share over there in China, is cutting their prices by, let's say, 20% or more or so next year enough, really, to offset what looks like falling demand over in China?
Well, we've seen a handful of things in the China car market. So one, there's been incentives for electric vehicles, which were adjusted earlier this year. But even with that, we're seeing flat year-over-year EV sales, and that's battery electric vehicles. And so in terms of where Tesla's at in their market, just introducing the smaller vehicle with the Model 3 into that market, we see a larger addressable market for them. And it's always been a bit of a niche for them in terms of selling the Model S and Model X, which have both been global products, and China's been a minor part of their sell-through. And so as we look at them ramping the Model 3 production, we actually see them as a share gainer, particularly if they're going to drop price and start addressing some of the larger market on the low end.
And Colin, we know that the Model 3 was already the least profitable of all of Tesla's models. So does cutting a price by 20% or so change your profitability models and targets?
It really depends on what the gross profit is on a per vehicle basis. So the way we've really done valuation and potential cash flow analysis on Tesla is looking at how much cash they're capturing per vehicle, and what we've been seeing is somewhere around $10,000 per vehicle. And so if we continue to see that sort of number flowing through with the Model 3 in China on the volumes that they could begin producing, that would be something that I think would be a bullish signal for us.
And so as you look into 2020, how is their cash outlook? What could be the biggest catalyst for the stock as you see it?
It comes down to two variables for us. One, just to level set here, they've got about $5 billion of cash on the balance sheet. So we don't think they have any real cash needs, and they're generating free cash flow at the corporate level. And so the two numbers that we're looking at to drive the stock next year are really volumes, the number of cars that they sell, and what the gross profit is. We think they've done a nice job of controlling their operating expenses, and that there's an awful lot of operating leverage for them as they scale up this manufacturing. If they maintain their gross margins, we think there's real significant earnings leverage, and that will drive the stock higher.